The results are in. PCE inflation came in line, and this set a fire under equities, which saw the Dow rally to 2023 highs. But what we really should be talking about is oil. The Saudis got their cuts, but oil still fell 5% from its highs on some buy the rumor, sell the news type of price action. But as inflation moderates and equities put up one of the best performing months ever, let's talk about December and what we can expect next month. Hello ladies and gentlemen, welcome to the daily recap show where we talk about stocks and the financial markets. If you like this video, please subscribe, hit the notification bell. Let's get into it. And it was one of those crazy days in the market. We saw a bit up early in the morning, then a big sell down, and then after PCE data came in, we saw equities just soar, especially in the Dow Jones, up 1.5% today, outperforming the Nasdaq, the SP500. Apple and Microsoft, the two biggest tech names, put up a fairly even day. The video was pretty bad, but everywhere from financials, utilities, basic materials, healthcare put up just green across the board. And if we go to the month of November, we put up a stellar month in November. Look at all this green. Last time I saw this much green, I was buying Parkway in Monopoly. Trillion-dollar companies, Apple, Microsoft putting up double-digit months. Tesla down 15% in October, pared all losses this month. Energy didn't perform as well, but we do know of the shenanigans going in there. But everything, regional banks, home improvement, communication services, cyclicals, defensives, just green everywhere. It really was a fantastic month if you were invested in equities as well as bonds. And here is my portfolio for the month. Now, I did underperform the S&P 500. I believe we gained 8.9%, but this also includes money I've invested every single week. I pretty much invest every single day, but my year-to-date returns quite spectacular. 41% year-to-date, outperforming the S&P 500 by 2x. That goes to show, guys, if you have a consistent, dedicated strategy, you can outperform the market. Don't listen to what anybody says. You just have to pick the right stocks, right ETFs, and you definitely can outperform the S&P 500. Now, let's actually have a look at the S&P 500's performance for the month. 8.92%, one of the best months on record. And I did some scans on my seasonality data, and this is what I found. In 2020, 1980, 62, 33, and 28, November rallied more than 8%. And only in 1980 did we see a December that was negative. Every other December was positive. So this bodes really, really well for 2023. And we cannot forget that December is a seasonally bullish period, especially in pre-election years. In pre-election years, we can expect close to 3% gains. In December, 72.2% of the time. Now let's have a look at sentiment. And the newest sentiment survey came in today. 48.8% of people are bullish on the bull train, and we're getting below the 20% level here for the bears. More people did shift into this neutral territory, but as it stands right now, people are very, very bullish. And I do think that what we need to see is more people capitulate to the bullish side before we get some form of any extended downside. Like I said, we want to see this get to above the 50% level. And once we've just got a little bit more people on this bullish side, that's when we could see some sell side. And I do think it's probably going to take the rest of December to get this number onto 50. So I am pretty bullish for December 2023. PCE data dropped. Now this is the Fed's preferred gauge of inflation. It actually came in line. The consensus was 0.2 month over month. We got that, as well as the PCE year over year came in at 3.5. No surprises there. What did surprise us was initial jobless claims came in a little bit better than expected, as well as the price index PCE month over month came in below estimates, close to a sign of deflation. And I think deflation might be coming sooner rather than later. This is the Fed's nowcast, and CPI is still sitting at negative 0.01. This is deflation, guys. This is deflation we're seeing right now. It's going to be very, very interesting to see what this number actually materializes in next month's data. And this is one of the reasons why I am very bullish on bonds. Bonds are a great hedge against deflation. And you can see that now in 2024 up to 2025, we're pricing in 5 rate cuts, with the first cut coming in March, a 47% chance of the first cut coming in March of 0.13 or 13 basis points in the federal fund rates. This is why bonds have had such a stellar month, is because the market was pricing all of this in, and bonds have had their best month since 1980. The TLT up 7.65%, and the US aggregate bond index up 3.45%. And this is just price performance. It doesn't include any coupons. And like I showed you, the price return 3.45% right here. The US aggregate bond index actually up 4.9% in the month of November if you include the coupon. The 10-year treasury yield, which peaked at 5%, is back down now to 4.35%. And yields did inch up in today's trade ever so slightly, but we are seeing signs of health coming back into the bond market. High grade spread hits its lowest level in nearly 18 months, guys. We're at 1.1%, and this just goes to show the credit worthiness of high grade borrowers. And these are like large cap stocks, banks, Apple, Microsoft. And this is why plenty of people believe small caps and mid caps will outperform in 2024. If you look at Jonathan Krinsky, he believes small caps, real estate, and regional banks are going to outperform, and they just started their breakouts. And I have to kind of agree with him here. Look at smalls, the SP500 up 7.5% in the month of November. The real estate index up 11.39%, and regional banks up 13.28%. Absolutely crazy. This was probably the most hated trade in 2023, and to see a comeback like this is absolutely wild. And the same thing with real estate. Really, really good to see that in the US real estate index. And I do think that small caps and mid caps are going to outperform in 2024. US mid caps and US small caps are still relatively cheap. Small caps have only been cheaper than current levels 16% of the time, and US mid caps 40.8% of the time. If you actually look at it, US mid caps and small caps are probably cheaper than even like global equities as well as international developed markets. And if you ask me, between the two, smalls and mids, what do I prefer? I really am liking mid caps at the moment, just because small caps are extremely interest rate sensitive, and there's just a bit more health here in the US mid cap market. Let's talk about oil, guys. And OPEC got their cuts that they wanted. They agreed to significant oil production cuts, an additional 1 million barrels per day, in a move that keeps oil prices elevated. But crude oil was, it says here, down 0.42%, but from the highs of the day, peak to trough, it was actually down about 4.8%, somewhere around that region. And it's very, very simple to see that essentially what's happened is this was sort of buy the rumor, sell the fact. And also it's going to be very hard for OPEC to enforce these output cuts. They're all agreeing to 1 million barrels, but how many are actually going to enforce that? You see, the thing with the Saudis is that they need oil at a certain price to maintain a budget surplus and to avoid a budget deficit. But when you look at a company like, let's say, the United States, they don't need oil for a budget surplus or a budget deficit. All of the oil they pull out from the ground just means more money in the economy. And that's why a lot of these countries like Nigeria, Venezuela, just want to pull as much oil out the ground as possible in regards to just cutting the amount of barrels per day. But I'm actually not that bullish on oil next year. I am more bullish on Bitcoin. And currently Bitcoin is sitting around the 38,000 mark. The halving is happening on April the 20th, 2024. And in every halving cycle, we saw Bitcoin rally post halving, 93x, 30x, 7x. And if history is to repeat itself, we are expecting price of Bitcoin to rally about 4.2 times 480 days into the future after the halving. So Bitcoin, even though it's been very bullish and a strong performer this year, could go even higher, at least according to these stats. But I still favor real businesses in equities. And this is the S&P seasonality for the first 10 days in December, the first 10 days, and then the last 10 days in December, the trading days. And this is in the pre-election year since 1928 to present. And you can see here that in December, right here and right here, the first 10 days tends to be pretty flat with an average return of about 0.04%. But then in the last 10 days, December really rallies, especially in a pre-election year, 1.75%, and it's up 82.61% of the time. Minimum drawdown 1.41%, maximum 8.49%. The risk to reward there, absolutely insane. And this has been observed 23 times since 1928. And plenty are expecting a correction to occur in December. They're citing stuff like volatility, moderating inflation, the economy weakening. And I don't think they're going to get the correction they think they are. I think what we're going to see is a correction in time. Market corrections can occur in two ways. Price can go up, then come down. That's a correction. Or price could just move sideways. This is a correction in time. Price goes up and then we just get this sideways action. Normally that's bullish for higher price action, and it often leads into continuation. And I think that's sort of what we're seeing right now. And I'll show you what I mean by that on the charts a little later. And if you actually have a look at the seasonality chart, the S&P 500 returns for December 1929 to 2022, you see the first 10 days, December, and this is the calendar month, we get this like basing period right here, sort of just this sideways action, not much is happening. And then after OPEC on the 16th, we sort of get this break out towards the upside. And this could be the correction that a lot of people are seeking for. A lot of people want a correction in price. I think we're going to get a correction in time. That's not to say we don't go lower in December. We could very much well go lower. I do look at the stats and favor the probabilities of a correction in time and higher price action, particularly towards the end of December. Now, before we hop on the charts, let's have a look at some gamma. Firstly, we do have quite a lot of negative gamma expiring over the next couple of trading days. You can see right here, and here. And that's why we're seeing sort of this negative gamma build up in this section right here. 4600 continues to be the call gamma strike that eludes us. Risks are forming right here. We do have quite a bit of negative gamma forming, but if you look at the call gamma versus the put gamma, it's very much skewed towards calls. And this is why I do expect the correction that we do get is probably going to be one in time. And if we hop on the charts, this is what I mean. So this is the SP 500, the ES futures. Let me just pull up the watermark so you guys can see that. What has price done in the last couple of days? Absolutely nothing. We're sort of just basing around here, and this is conducive to a correction in time. If we actually pull up, like, I hate using indicators, but if we actually pull up something like the RSI, and we have the RSI right here, and even though we're kind of just like grinding higher, you can actually see like the RSI is actually falling ever so slightly. And if we just continue this price action over the next 5 to 10 trading days right there, we should see the RSI continue to come lower, which again will be very supportive for a late December run. And this is why I think the correction we do get is one that's going to be in time. We're not going to see anything significant, and I do favor all selling to be met by bull demand as long as we're above this 4495 area. Below here we switch into negative gamma. I said early in the week we're going to go ahead and touch 4600, did that, and then we came down. Again, I'm bullish above 4495, and I don't think we're going to break it in December. I think we're going higher. I really do. I think we're going to go ahead and break the highs here at 4637 we made in July, and I think we're going to go ahead and hit new all-time highs right here in 2024. In fact, my price target for 2024 is 4300 to trade anywhere between Q2 and Q3 2024. After this period right here, this is when we can look for some really deeper sell side into the end of the year, but we have to assess the economy and price action a little later on, and I'll keep you guys updated. So go ahead, follow me, subscribe on YouTube, follow me on Twitter for all of the updates, because we've been long all year, especially around this key support area right here. We've made a lot of money on the upside. There will be money to be made on the downside. I'm not just a bull 24/7, guys. I will take bearish trades, I will take sells, I will take short sells when needed, but as it is right now, we're bullish. My long portfolio is done very well for the year, and we're going to continue making more money because I do see further upside before any longer term sell comes into play. Looking at some dark pools, there wasn't much. We do know that there's a huge amount of shares right here in the pro shares, the QQQ, the leveraged bull Nasdaq 100, and we did see a pretty big trade come in towards the end of day right there. We'll see what that is. There's a big amount of buying support right here and here though, so it's going to be very hard to break these levels. Looking at the TMF, the Treasuries 3x bull, a big trade came in here, but again, huge amounts of support right here. So if they do push below here, that's going to be quite bearish for yields, and I do think we're probably going to see a pullback in yields. We've had a very big run in the last 12 months and yields have come much lower. I do think that we are going to see just some form of a pullback before we do have the next leg lower into 2024, and I could see the top of this retrace probably around the 16th or the 17th of December right there before we do move lower. So everything's coinciding with a late December run. Looking at data, we got the PCE data today, GDP data yesterday, and we have ISM manufacturing tomorrow, the PMI, and then Jerome Powell speaking as well. So that's going to be a big event. Then I do believe this is some of the biggest data we have for December until the bond auctions, until after OPEC. But if you've watched up until now, guys, thank you so much. If you like this video, please subscribe and hit that notification bell. Leave a comment, guys. Like this video too.